As the U.S. session comes to a close and the Far East Asian Pacific session comes to an open, I thought I'd take a look at the New Zealand versus U.S. dollar from a tactical perspective. The price action is up and down today with the pair breaking below some moving averages. I'll talk about that and the technicals for this currency pair going into the new trading day. So let's get started. I'm going to look at the hourly chart of this currency pair, and what we saw in trading last Friday was high prices being reached, and then on Monday in the Asian session the price moved higher initially and then it came up to test those high prices from last Friday's trade, found willing sellers, and it started to rotate to the downside. The 100-hour moving average held support right here. The market bounced modestly to the upside and then fell below the 100-hour moving average. Toward the end of trading yesterday and into the early trading today, the price moved a little bit lower, but then bounced back and retested that 100-hour moving average in the Asian Pacific session, maybe early European session today. Found willing sellers against that level at 0.57369. And it was more momentum to the downside. Admittedly, the price traded above and below the 200-hour moving average, but with a lower low in the U.S. session right through here. We are rebounding back toward that 200-hour moving average, and that will be the key barometer going into the new trading day, or the closest barometer going into the new trading day. If the price can stay below that level from a technical perspective, it would give the sellers a go-ahead to push down toward this swing area down through here. The swing area was defined by a number of different swing highs right here, which then became support through here. And then traded above and below the levels. But the last thing it did right here before moving to the downside was find willing sellers against that level. And then we went to the downside. The corrective move up here came up to the swing area right here and then fell even sharper. Admittedly, the price traded above and below the levels through here. But after the price failed above here, we started to use that level as resistance here, and here, until breaking to the upside right through here. Came back down to test the area right through here, fell below, but held the 200 right here. You can see the points here. The technical levels are doing a pretty darn good job of either holding resistance or providing support. And when they failed, things like the moving average came into play. With the price trading below the 200-hour moving average, it is a bit wonky, but we'll see if that 100-hour moving average can hold resistance like it did right here and rotate back to the downside, in which case we see what happens down here in the new trading day between the 0.5683 to 0.5694 level. That's that key swing area on the downside. Break below that level, it opens up the door for further selling pressure. So that's my look at the New Zealand versus U.S. dollars heading into the new trading day. My name is Greg Bankolowski. Good fortune as you're trading. Bye-bye now.